What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down what the news, data, and technicals are telling us about the markets in Tesla and how this may affect the share price going forward. Now, before I break anything down about this, before I talk about what data is coming out for tomorrow that will move the markets, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 5 days. Check it out before they run out of this free money. With that out of the way, let's get on with the video. Tesla was down 3.35% for the day. I did warn everyone that we are going to see a big reaction to CPI, and the market did actually respond to it. Now, in the very beginning of the day, right over here, we did see Tesla try to pump up. In the very beginning, the market did try to push up, and this was actually a fake out for a lot of people. And then later on, basically the market came down and pumped right back up, and then we continued to drop as we got the FOMC minutes, and we saw a lot of Fed speakers actually scare the markets even more. The Fed has actually announced, or at least some of the big officials and staff are announcing, that a recession is very likely now, and this did actually cause the market to cool off a bit. And overall, this did drag Tesla down closer to 180, and we are at a very critical zone right now, because if we fail to bounce off 180, we're most likely going to retest 176. And it's very important that we balance it around there, because if we fail at 176, there's a gap down at 174.5, and then we have another very important demand zone between 172 and 170. Now, I'm hoping Tesla does not go all the way down there, but it's very hard to predict right now because it depends heavily on the data coming out and also earnings for Friday for many different banks. So I'm going to break down all of this information for you guys and also what happened with CPI before I talk about the technicals and the news. But first, I have to talk about this. So CPI came out, all right? And this was actually not as good as some people thought in the beginning. Now, right here, as I mentioned yesterday, there is this decline that's very clear, but you have to remember that this does not mean prices are going down. This just means that the rate at which they're increasing is slowing down. So prices went up 9% back in June. This is just according to CPI. Then recently, they actually went up about 5% for the month of March 2023. They went up that much, right? They're still going up, but it's not as fast as before. But then why on earth is core CPI, which is the red line, not the red, the purple line, sorry about that, the purple line right here, why is the purple line right here higher than the line right here? And this basically tells us right here that we're actually seeing CPI now being deflated because of energy and food. And this is actually not the best of signs. And the reason for that is because when the Fed looks at the data, the Fed looks at what they can't control. The Fed can't control food and energy. They have very limited control from that sector. That's important because they prioritize core CPI over CPI. And now that core is actually increasing, this is not good for the Fed. It incentivizes them to be even more hawkish and give us another 25 basis point rate hike, which I believe they're most likely going to do in May. Once again, the market did not like that. I also want to note that when you actually look at the specific details, food actually went down a little bit according to the data. And once again, this is known as the CPI by a lot of people, which means that we shouldn't necessarily trust this 100%. I do believe this number is very manipulated, but we're just going to go based off what the data is telling us for this analysis, because this is what the market looks at. This is what the stock market actually cares about. So for food, we did see this drop a little bit. Energy did drop a lot compared to before. That's a good sign for now. However, you have to remember the fact that OPEC Plus may start cutting production very soon, which means that there's going to be less supply of oil on a day-to-day basis. That's like over 1 million less barrels per day being produced, which is likely going to bring energy up going into the summers. So what this tells me is, if we ignore food and energy, the Fed is not liking this. Inflation is still too hot. They're incentivized to be more hawkish. And then on top of that, yes, people could try to celebrate about how CPI is dropping, but what's going to happen this summer if we truly do get over 1 million barrels of oil cut in production every single day from OPEC Plus? Supply goes down, right? Prices start to go up. This is going to start driving up inflation, not just from the energy sector, but also different sectors, because this adds to more costs for businesses. A truck company, for example, traveling to deliver goods is going to have way more expensive if gas starts to skyrocket again. And this is actually going to lead to even more inflation going into the summer. So there's still a high risk of that. We're not necessarily in the clear. And this is part of why the Fed is going to have to be very, very careful with what they end up saying and what they end up doing. Now, this in turn caused the market to basically gap up. The market slowed down. We actually dropped pretty hard. Then we got another bounce. So we had like two fake outs in the first like hour of the day. It was pretty insane, especially trying to trade it. And then slowly the market started to actually downtrend. And then we got the FOMC minutes. What that basically told us was there were some Fed speakers that wanted to not cut, pause rates. Other ones wanted to actually give us 50 basis points. This was before the banking crisis. So it was very mixed, and they ended up actually settling at about a 25 basis point rate hike. But what else is very important is some Fed staff and some Fed officials are now saying that a mild recession is now likely this year. Now, it says the Federal Reserve is saying this. This is actually not Jerome Powell saying this is just other speakers, but it's still very important because there's this massive shift in the sentiment. The Fed was telling us there's a soft landing coming. Don't worry, the soft landing will most likely come. Then, when Powell was asked that during the last FOMC meeting, he became very stern and unhappy, and he ended up saying that it's still a possibility. It's less likely, but it's possible. He just was not as confident about saying a soft landing anymore. And now Fed speakers are saying a mild recession is likely to come. So there's a very big shift right now as we're seeing demand continue to slow down and the economy is contracting and entering a bigger recession as the days go on. In fact, we're probably in one right now, in my opinion. Now, for tomorrow, make sure you are watching the data before the market opens. We have PPI coming out. This is also very important. There have been days where the market crashed off PPI and also rallied off of it. So make sure you watch this carefully. We want PPI to be at about, let's see, year over year, 3.2% and core at 3.5%. What is PPI? It's basically like CPI from the producer side, right? Producer price index, very important to see how inflation is moving. The Fed looks at this too, especially core PPI. Once again, it's coming out 1 hour before the market opens. We want this to be cool. We want this to be below the forecasts. If it's cool, this could actually help the market improve a little bit. If it actually is better than what we want it to be, especially core, everyone's going to be watching this on the institutional side. And then on top of that, we have initial jobless claims and jobless claims coming out at the same time. This is also extremely important because given the fact that there are some signs of core CPI going up, the stock market wants jobless claims to go up. We want pain in the jobs sector. We want there to be more and more pain, unfortunately. This is what the market wants. And if this is low, the market's not going to like that. We want over 234,000 initial jobless claims. And then for the average of the 4 weeks, we want 238,000. Super, super important stuff. We want this to be high. We want PPI to be low. This is the reason why I'm not giving you guys as many predictions as before, at least for the time being, because we're reacting to data and it's very hard to predict how this is going to come out. I don't really know what the numbers are going to be like, but what I can do is actually see the numbers when they come out and then look at the charts and dissect what is likely to happen intraday. But anyways, when it comes to Tesla now, I want to break down something else. So for Thursday, we have lots of data coming out. Do not forget this. Remember this, remember this, remember this. For Friday, we have something else that's massive. We don't have too much data. We have some mortgage data and some things involving prices, nothing too huge compared to Thursday. But for Friday, we have earnings coming out for massive banks. We have JP Morgan, we have Citi, we have Wells Fargo, PNC, BlackRock. Big banks have earnings coming out. That's going to be very impactful for the markets. If the banks miss big time and they fail, the entire stock market could start to actually tank. We have to be very careful during times like this. 406 is max pain for SPY for Friday. We have about 600,000 puts expiring currently. I don't know what I could say about that as of right now because it's going to depend heavily on the data. And what the data does will affect how the market moves. I'm going to talk more about the market in a couple of minutes. I want to now talk about the news and then the data for Tesla. Basically, Elon Musk responded to Zero Hedge right here, talking about how the FOMC minutes show many staff and some Fed officials are saying a mild recession is to be expected. once again, and they all are backing a 25 basis point hike and more continued quantitative tightening. The Fed did ease up on policy when the banking crisis was happening, when we saw lots of banks fall. And now we actually saw a lot of them, they were easing up, and now we're seeing more of them wanting to actually tighten again. And this tells me there could be more pain for banks and a lot more pain to come for the markets and the economy. Elon Musk responded with a big wow. Once again, he is still looking at data like this. He's always looking at data. And one good piece of news for Tesla is the fact that Tesla now has mobile connectors that lets you charge your Tesla anywhere where there's a power outlet. Once again, very good for investors and everyday people. I consider this awesome as it's a lot more convenient, and this will actually help more and more people be incentivized to get these cars, especially when they have different outlets. When it comes to Tesla right here, we also did see them deliver a new fleet of semis to PepsiCo. Once again, very awesome news. The semis are continuing to grow and grow and grow, and this will be very big for Tesla going forward. Now, there was a recall that happened to them because of a braking issue, but they did fix this, and now we're continuing to see more of them rolling out, and more companies are going to be involved in the EV race, especially for semis. Once again, bullish news for Tesla for the super long term. For the short term, however, we're going to be more affected by data, the Fed, the PPI reports, and other factors like that. Now for Tesla, I have some better news, not so great news, but still better news. So remember right here when Tesla's inventory levels went up like crazy. This was back around mid-January. Tesla announced a price cut around like this period right here. Then the price cuts came, some big price cuts, and we saw inventory just drop because people started buying the Teslas. Inventory remained pretty low throughout the majority of Q1. And then what happened was, as we entered the end of March, we started to actually see inventory levels go up. Tesla was slowing down when it came to deliveries. That's part of why Tesla did not reach like 430,000 for Q1. And then it just continued to rocket up as we got into April. We actually saw a max of 458 of just the Model Ys continuing to go up. So Tesla over the weekend, during Easter weekend, Tesla announced that they're going to be giving us more price cuts. And now we're actually seeing inventories continuing to drop a little bit more. That is a pretty decent piece of news, but the not so great thing about that is the fact that Tesla's cut prices so much. They gave us another 2 to 6% price cut on the different models. And this is not so good because I'm going to be very, very cautious going into earnings. Because they did have price cuts before, and this is actually the fifth one that just happened. I don't know how this is going to affect their margins, their profitability, and how this is going to affect their revenue going forward. It's going to have a big effect on them. We'll have to wait and see how it comes out. So we have to be very, very careful right now. All right. Especially for Q1, and I would say more towards like Q2 earnings. We'll see how it goes. Make sure we're all very cautious. For Tesla, we dropped on higher volume, which is not the best of signs. 140, it's actually almost 150 million in volume, higher than average, which is once again not the best of signs. And right now, the short volume hit this low, but it tends to bounce off these levels, which means we could see a little bit more shorting. Finally, when it comes to the data, Tesla is actually just pretty flat right now in terms of its price-price ratio, starting to actually decrease. If this drops more, this could actually lead to lower performances for Tesla. It does tend to bounce around this area, so I do think Tesla could get closer to stabilizing around the 180 to 176 area. But if the news is strong enough to tank the markets, this is actually going to drag Tesla down. Deutsche Bank is bullish on Tesla. And finally, Tesla tends to be green only about 47.6% of the time on Thursdays. They tend to not be the best days for Tesla historically. And finally, when it comes to the shorting, we did see another increase in shorting just a couple of days ago, just 2 days ago. We saw 24 million Tesla shares shorted. So make sure you're very, very careful going into these big events and big days because the shorts are now coming back to Tesla. So what do I see happening to the share price? I want to inform everyone it's going to depend heavily on PPI and initial jobless claims, whether we gap up or gap down. But I also want to note that there is a possible double bottom that could be forming here. If Tesla fails to hold 180, that's a very important support zone right here. I'm going to be watching this 176 zone. It should bounce off here. We have some nice support. If it fails, there's a gap all the way down that's unfilled around this 174.5 area. Tesla could get dragged all the way down there or even to the lower 170s if 176 fails. So it's a very, very critical zone for Tesla. But now I want to talk about something else that's not so great for the bulls, not so great for the markets. It actually relates to things I was talking about in the past. All right, so when we look at SPY, I noticed something that's not good for the bulls. And that is, if you look at the chart, our high was around like 412, barely 412. We made a new high today. In the very beginning, during this fake pump into open, we made a new high. But look at the MACD, it actually made a lower high. RSI made a lower high, it actually went down. So the RSI and MACD are going down and down and down. Price went up. This formed a very, very important divergence, and that tends to mark the tops during moves like this. Now, here's the thing about this, there's no guarantee that this is the top. I mean, we could try to go a little higher, but the problem is if we do try to break this, if the RSI and MACD remain at these lows and they fail to break the highs right here, the negative divergence is still going to be present, which means there's still going to likely be downside anyways. So there's likely downside coming regardless from a technical standpoint. This is starting to look more bearish to me. I don't know if we're going to try to break this high and then come down, or if we're just going to start tanking from here. Either way, I do see downside coming. The odds are now starting to favor that going forward. However, even though this is just the technical aspect of it, we have to look at the PPI report. We have to look at like the initial jobless claims, earnings coming up. We have bank earnings on Friday. So those all will play a big role as well. But right now, I'm telling you, from a technical standpoint, this is looking a lot more bearish. The odds are favoring more bearish price action. If we're bullish, we have to break above 409, then retest 411. If we break that, then 412 could come. Break that, then just 414. I once again think that's very unlikely. And what's very important for SPY is 406. We have to hold 406. If 406 fails, this thing is going to come falling pretty hard down to the very low 400s, the gap down to this like 401 area. Then we also have a gap down in the 390s. It's going to fall hard if we fail at 406. So make sure you watch that area very, very carefully. And anyways, what do I think is going to happen? Well, I think we're going to see a rebound and try to retest like 409 to 410 tomorrow. And then we might reject. And overall, the odds are favoring more downside to come for the market going to the next couple of days, next couple of weeks, especially as we get earnings. And it's looking like earnings, excuse me, sorry, earnings may not be that awesome. And there's likely more downside coming. It is unfortunate, but it is what it is. The dollar is still not looking that great. It's just barely holding the 101s. For us to turn extremely bearish, this thing has to break out very hard, but so far it's just trying to hold these levels. We're about to get this crossover. We're just waiting for confirmation, and we'll see how it affects the markets. There's something else I forgot to mention that's also not so good for SPY, and that's the fact that we did have this inverse head and shoulders that was playing out. It pushed up, but now we're failing to break this high right here. And when you zoom out of the chart, check this out. We have this very important, very clean looking head and shoulders that has been developing. There's the left shoulder, the head, then the right shoulder is forming. And notice how we're at these highs. We hit these highs, and now the sell signals are coming up. The MACD is actually about to cross. We have a bearish divergence on the RSI. We're turning bearish right here, and this happens to be right where the right shoulder happens to be. So it's making me think we might see the market start to drop very soon. Could we drop to new lows? I think a lot of people are wondering that. Like I said in my previous video, I do not want to worry about new lows or anything like that. We have to look at this from a level-to-level basis. First off, we have to watch if we could hold 400. If that fails, we have these gaps down here. Then we're going to be watching, I believe it's the next very important level is 377 to 380 on SPY. It has to try to hold that, because if it fails at 377, the algos are going to turn very bearish, and we're going to see the market start to sell off more. Then we have the weekly 200 EMA around the I think it's 360s, 36, what is this, 364. It's going to likely turn a little lower than that if the market just starts dropping. But around this area, if it fails to hold 364 going into the next few months, hypothetically, if it breaks below this red line, a clean break below that means we're most likely going to see new lows. The market's going to tank because of the recession, inflation. Inflation could likely pop going into the summer, the Fed raising rates more. So many different factors could cause it. Please be very careful. But I just want to note so far, if you look at the market, the odds are favoring downside for the shorter term. I don't know if we're going to try to rebound a little tomorrow and then continue dropping. I think we're going to retest 409 to 410, but I'm not as confident about us just breaking out too much. We have this negative divergence still continuing, and the odds are favoring this thing slowly dropping and dropping as we get negative catalysts such as earnings and eventually cooling off. For NEO, it did almost exactly what I predicted. I told you guys, NEO had but I'm sorry, I'm supposed to use the hourly for this. NEO had this very clean looking head and shoulders, left shoulder, the head, and I told you guys this thing would likely pop. I became a little bit less confident in the pop because of how close we were to CPI. And I told you all, now that NEO was up here, we'd likely see this thing reject, and it actually formed a right shoulder, right? Very clean. There's a gap down at 8.75. It's likely going to fill the gap soon. And we're likely going to break below this $9 support. We're actually barely holding it right now. The MACD is turning more bearish. Once again, not looking the best. If this thing does continue to sink, if the RSI goes lower with it, that's going to actually confirm more downside. Once again, not so good for many investors. I'm just going to talk about a couple more, by the way, before I end the video. For the QQQ, this to me personally is not looking that great. It's showing lots of signs of relative weakness. I'm going to cross over on the daily right over here. Or we're very close to getting this crossover. I was saying it. We actually got it. Sorry about that. We got the crossover on the MACD. This daily candle is looking pretty weak so far. It's going to likely rebound and try to retest, I think, the 1 hour 50 EMA, which is around 315, I believe. Yeah, the 315s. It might try to rebound just a little bit, but overall, it's just looking weaker and weaker as tech stocks are starting to slow down. I believe the odds favor a small bounce and then this thing just continuing to drop. And we're going to retest 310 very soon, which is just where or very close to where the 200 EMA happens to be. If it breaks below that, we're going to likely fill this gap and come even lower than that into the lower 300s. Once again, guys, I think the technicals are telling us this, but this will depend on PPI and also on jobless claims, the earnings coming out, and many different factors. But I'm just saying the odds are favoring downside based off this structure. It might try to bounce a little bit. It could try to bounce a little first and then start to drop, or it could just drop from here. The VIX has a bullish divergence, a very small one. It's very hard to see. I noticed that we made a lower low on the VIX, but the RSI made a higher low. And the VIX is likely going to start breaking out soon. I think within the next week, we might get a breakout in the VIX, and that could probably happen because of the S&P 500 continuing to drop. We're about to get this crossover on the MACD. You can see right here it's stabilizing. The VIX is trying to stabilize and wants to start rebounding. If it breaks above the 50 EMA on the daily, that is going to be a very bearish signal. It's going to get above 20. And if it keeps going, this could also be bearish for the markets. For Amazon, Amazon to me, looking pretty bearish. Might try to bounce a little bit, try to get back to about 98 or so. And then if it fails, we have this crossover right here. It's going to likely continue to come down to 96.2. Maybe even lower. It could come down to fill this gap around the 92 later on. It could be forming a head and shoulders, by the way. So it might actually try to bounce off like 96. If it does bounce, it could be doing that before it does continue to drop. Overall, that's what it seems to be forming. NVIDIA has a clean head and shoulders developing. You could see it on the daily. On the hourly, so far, it's actually validating this. There's no sign of it invalidating it. And so far, it's holding up quite nicely, the head and shoulders. So what I'm seeing is NVIDIA, I mean, it could try to bounce off 264. I'm not too sure it's going to do this. It's very close to where its neckline happens to be. It might try to bounce. If it fails to bounce, if the market drags this thing down, this is a giant stock, it's going to affect the whole market. It's going to start to come down if 264 fails to about this 258 to 258 to about 260 zone. We have actually a demand zone right here. If it fails to hold that, this thing is just going to start tanking. But overall, it's looking like it's pretty overextended, especially on the daily. And I think it's finally time for some more downside, right? Look at how overextended it is on the daily chart. Just look at how this thing was pumping all year long for the past like 7 months. It's just been going and going and going. The time has finally come for it to actually cool off. And we're actually getting more bearish signals for it. We also have these gaps down here, so make sure you watch them. Apple is very mixed. If we're bullish on Apple, I mean, there is a chance it could try to rebound, but if we're bearish, there are quite a few gaps around the mid 150s. If it breaks below the low of the day, it's most likely going to fill the gap around 157. If it bounces, if somehow, the bank earnings come out and they're like super awesome and the banks do well and something happens like that, it could try to fill this gap above. I just think it's very unlikely. I think the odds favor it bouncing, retesting the 50 EMA on the hourly, maybe trying to get to around 161, around there. And if it fails, if the market just continues to slide, we're likely going to see Apple fill this gap. And if Apple does fill this gap, it's going to drag SPY and QQQ down and the whole market even lower. And we might see this thing drop all the way down into the mid 150s quite quickly. It's a little bit more likely, once again, but be prepared for a small bounce into the open before we do see more downside, most likely. But until then, I mean, I can't really promise that that's going to happen. We have to see what the data tells us. I just want to let you know that the odds favor that. As far as Google goes, it's actually holding up a little nicely around this 105 area, but it does have a possible head and shoulders developing as well, kind of like Amazon. So what could be happening is Google might try to fill the gap. I think there was a gap down here. I think I missed it, but anyways, it might rebound first. Could try to get to the 106s, then it's likely going to fail. Then it could come down to retest 104. And if that fails, I'm going to be watching 103 followed by 100 flat, right? But I do believe the odds favor downside. I think there's a gap down around like 101. To me, it's looking like it's losing lots of momentum and it's just slowly becoming more and more weak. Finally, for the 10-year Treasury yield, what's going on with this thing? In my opinion, this is kind of mixed. There is this gap below, so I don't know if it's going to cool off. If it does cool off to fill this gap, this could actually be bullish for the market temporarily. But there are a lot of gaps up here in the mid 30s, the 40s, even all the way up to almost 41. When this thing starts pumping, if it does start pumping soon, that's going to be bearish for the stock market. And so far, it's actually gaining some strength. It's actually holding above where the lows were. So we'll see what this does. If it does start to break out, it's going to become bearish. We'll just see how that ends up playing out. But anyways, I want to thank each and every one of you for listening. Please have an absolutely incredible rest of the day. I also want to just note that I have a new shop that came out. If you want to buy a shirt that says "To the Moon" or help support the channel, I would really appreciate it. But no one's obligated to do anything. Once again, I thank you all so much for listening. Have an absolutely incredible rest of the day. Remain calm, cool, and collected. And if you want to see this shop, I forgot to mention, it should be right either below or above the comment section. Depending on the device you're using, you should be able to see like a little, it almost looks like an ad, but it's just my shop with my custom merch. You could see it right there. It's really your choice, guys. I really appreciate it, every single one of you. Have a great day. Tesla to the moon, because the long term is still very, very bright. And just so you know, we could be forming a double bottom if we do retest 176. If it fails to hold that, it's going to come all the way down to about 174.5. We need to see Tesla try to hold 176 tomorrow if it does come down there. So make sure you watch that very carefully. It could try to bounce off 180, but I'm not too sure about that. It really depends on the data. Once again, that's what I have for Tesla. Anyways, that's it for the video. Thank you and peace out.